Welcome to another Rogers Capital Market Commentary, where we attempt to be the antidote to water cooler wisdom. Well, November is here. Hope you had a happy Halloween, but man, it sounds crazy. November. Next week, we've got midterm elections. And if you can believe it or not, 3 weeks from now, Thanksgiving is here. Just doesn't sound right. Well, how did October go for us? Pretty good. I mean, real good, actually. A really historically almost record October, at least for the Dow. The S&P was up 8% for the month. That puts us year-to-date negative 19. Why the rebound? Well, we had two drivers. It's the same two drivers we've been talking about, really ad nauseum for the last several months. And that's inflation and the Fed's response to the inflation. Well, we've had a series of important economic indicators suggesting that the economy is declining and that inflation is finally decelerating. Markets beginning to factor in a Fed transition to a less aggressive stance, or at least the hopes of that, some softening. Well, the GDP price index, a comprehensive inflation metric based on consumer and business and government purchases, fell to the lowest rate that we've seen since 2020, illustrating a deceleration in inflation and again, honestly, hopes, or at least, welcoming the Fed's, softening and stamping out inflation. Additionally, the third quarter GDP number came in and we were positive, so positive 2 and change percent. And that's after 2 consecutive quarters of negative GDP growth. That was driven by a resilient consumer sector, a narrowing of the trade deficit, which contributed about 2.7% towards that 2 and change, toward that headline growth estimate. A strong labor market, stockpile of savings, really, I think, through the pandemic is what has helped drive the consumer so far this year. But really now and going forward, the consumer will be the linchpin for either a soft or a hard landing we've been talking about for several months now. Now, next week, election week. Now, you've heard me say this before, but politics makes people stupid. I hate to put it to you that blunt. Those of you who've not heard me say that before, I'm not talking about, social importances for you or moral importances for you. I'm talking about the investor side of things. One of the dumbest things that you can do as an investor is allow your politics to influence your investment decisions. And that's because Wall Street is not red or blue. There's only one color that Wall Street cares about, right? This color, green. A split government looks like a certainty. 538 or real clear politics, really all sides predicting a Republican House, and in fact predicting a large majority, and even potentially the Senate. So why is that good? Well, again, we're not talking your moral, your social, your political leanings per se. We're talking about from the investments perspective. Gridlock is usually good for investors. Why is that? I don't know. I'm not exactly sure. I don't know if it means that They're spending all their time arguing with each other up in Washington, and the rest of us can run our businesses and raise our families and make money. I don't know. But usually, gridlock is good news for us as investors. Now, a couple of seasonal historical facts I'll leave with you. Since the beginning of the S&P price data, going back all the way to 1928, excluding dividends, the S&P has shown a cumulative gain of 274% in the months of May to October. Okay, so back to 1928, May to October, seasonally, not really the best necessarily. In fact, some of you have heard that maxim, sell in May, go away. We've poked holes in that over the years, but one of the reasons you hear that maxim is because of that performance, especially in comparison to November to April. From November to April, seasonally, historically, the index has shown us a cumulative 5,145% gain. Now, not every year. In fact, not this most recent year. But seasonally, historically, pretty good opportunity, November to April. And in fact, the month of November ranks as the second best month for investors out of the 12 each year. A 2-point average growth in the last 20 years anyway, 2% growth. Second only to April, which is the best month for investors, a 2.2% growth. So here's to a return to the historical, right? To normalcy. Well, that's it for this month. Please know that as my family is counting its blessings this Thanksgiving, that we're thinking of you. You'll never know the blessing it is for me to be able to do what I love and do it with folks, friends, really family like yourself. God bless you and happy Thanksgiving. We'll talk to you next month.